Welcome to the Sound Money Investing live stream this Saturday morning. It's a let's talk about silver, gold, and Bitcoin. Hope everything and everyone is fine. We will be covering a little bit the charts for gold, silver, and Bitcoin like we do every single weekend. And if you have, and we have questions in the chat, we'll go over them. So far, we haven't got any, but I hope that soon we will have a few subscribers in the channel. We just have 14 videos in. We are just starting, so the algorithm in YouTube is trying to find the best fit for our channel. So I'm giving it time, and eventually we will have more interactions in the live stream, more interactions within the videos. So I will be happy to answer questions that I get for individual videos, but also during the live streams. I plan to do live streams Saturday morning, Sunday morning, and usually Wednesday night. I'm trying to juggle the hours. For now, I'm trying to set it up at 11 a.m. on the weekends and at 9 p.m. on Wednesday. That is the big plan so far. For the videos, you go to YouTube, you type in Sound Money Investing, then you'll find our channel. Then you have the different videos here. This morning I posted a recent one, which I'm gonna cover a little bit today, which is the amount of days that I'm expecting Bitcoin to still go down a little bit until the really bottom of this cycle. That's based on previous cycle data. So stay tuned for that explanation. I cover that in this specific video for those who want a little more detail. I'll go over it today quite quickly, but it's quite interesting to follow. So we have all our videos here, and in the live section, we have this is the current live stream and the previous live streams that I saved there that you can go over and listen to what was discussed in previous live streams, the subjects that I covered. And it's always interesting to some information is time sensitive, so it may not apply, but I try to also include general guidelines, or based on my experience, general points that people need to learn if they want to be comfortable investing in gold, silver, and digital gold, which is Bitcoin. So let's go to a few news first, and then we'll go to the charts right after. So in terms of gold, quite a lot of volatility. We got a new bounce out of gold in the recent days, but there's a lot of people who are mad the fact that um, gold is not going higher. It's not a really pumping, going really high in these uncertain times. So quite a lot of people are disappointed in the performance. I am not. I'll explain why during the charts. And it's doing its job. It's just that people are maybe expecting a little too much out of gold. I think it's still a long-term play, a good play to be part of your portfolio. And due to the overall macro environment, I do not think that the conditions to move away from gold are near us for years. So I'm playing gold for really long term here because I think the conditions and the reasons to hold gold are going to stay for quite a long time. So it's not a weekly trade or a monthly trade for me. It could be for you. If that's your approach, then it's going to be a little more difficult for you in order to really be able to detect um, the right regions in which to be in the market in gold and out of the market in gold. In terms of silver, quite a lot of volatility. Um, Obviously, more volatile than gold. Silver has been moving quite a lot. Also, people are a little bit disappointed in the performance of silver. Many are talking about potential big correction still. We have corrected quite a bit. So I'm more on the trade sideways camp for now. I think it's going to be volatile. Uh, Gold, silver, not so much Bitcoin recently, have been reacting quite strongly to news. Same thing for oil in this specific time because of the conflict in the Middle East. So obviously, it's a melting pot of things that are going on. Middle East tensions and the situation there, oil prices, oil prices, and then the economy. And out of that melting pot, what's the influence on gold, silver, and Bitcoin? So if you want to predict what's going to happen, good luck, because it is very unstable, very volatile period to be able to clearly define um, clear paths of trading for either of these assets. I think the only things that you can kind of predict is the mid to long term periods in terms of these assets. Even for stocks, it's quite volatile. Not a people know exactly how the markets are going to be reacting from day to day. So to me, it's a little bit pointless to trying to predict daily or a couple of days within a week movements of these assets. I think the big plan or your big plan towards these sound money assets are more realistic and easier to predict. So let's start with gold. Currently, gold is at $4,676. On the last trading day, it traded down minus 1.72%. So we're going to zoom a little bit on what has happened recently in terms of gold. Let me just zoom in a little bit and we will see what's going on. So we peaked in January 2026, corrected hard, consolidated a little bit, pushed up towards 5,400, then big correction again. This wick went as low as $4,100, then came back, consolidated a bit, and pushed up a little bit. So there are buyers in the market in terms of gold. When you see wicks like that, it means that buyers came in when they saw that the correction was a little bit too extended. And I believe that this will continue for the upcoming months. But if you look at since, let's go back to beginning of 2025. So the price of gold in beginning of 2025 was around 2,611, and now we are at 4,676. So quite a lot of people are still in profits in gold. If you look at a little bit over a year since they got in the market. So only the people that got in early 2026, actually near the end of January, that was a peak. So only those people may be in the red in terms of gold in the recent period. We, even in 2025, you see we were quite away from the weekly 50 SMA. And we are quite a long way from the weekly 200 SMA. So we have buyers and we have quite a clear support here in terms of a gold price on the weekly 50 SMA that is actually pretty close to $4,000. So can I expect gold to correct to $4,000? It could probably. We have not done this since 2025. So the whole year we were away from that trend line. And what you need to look at is that in the beginning of 2025, the space between the trend line and the price action, the gap was, let's say, mid-range. It got extended here in April 2025. Then gold corrected a little bit and traded sideways for a long period of time that allowed the distance to come back closer to the weekly 50 SMA. Then another pump in price. We move quite away from the trend line, and then a correction was natural in terms of gold, and then we push really far, like very a long space between the price action and the weekly 50 SMA, and then we started to see big corrections in terms of gold. So technically we have come back to a similar space between the trend line and the price action right here when we hit bottom in the end of March. So not too long ago, we were closer, and then we started to pump a little bit in terms of gold. So we could see this pattern for the upcoming weeks and months. Either we trade around this space, but we follow the MA50, and that's highly possible. If we really touch the MA50 and bounce back, that would be even a stronger bullish sentiment in my case, because we would have corrected quite a bit. If you look at the difference, let me try to calculate here how much it is from the top wick, and if we correct right now to the MA50, it would be pretty close to 30% correction in terms of gold, which is a significant price correction, healthy price correction. That would not change my thesis long term that the price of gold will continue its upside. Okay, so that is something to take note. But for now, the price action is up and to the right. Both weekly SMAs are going up and to the right, so the momentum for gold is intact. We are still going higher, and that's quite positive. When people say that gold is not doing its thing, well, this region right here is a healthy profit take during this price appreciation period. No single asset goes up in a straight line, and especially when it has like boosts in price where it goes really, really high really quickly, it's impossible to maintain. You have to have some corrections along the way. That's why I say that my outlook for gold for now is quite bullish, not financial advice. I'm looking at the big picture. So if we get still nice dips in price for gold, I will personally be accumulating. And that's also important to uh, have a little cash on the side to be able to average down your price, especially if you bought at the beginning of the year. If not, if you're still in profit, then you need to look into see if it's a good thing to add to your position. But when it has corrected more than 30%, it becomes quite attractive to nibble in and add to your position. When you're pushing up vertically in terms of price, these are profit taking regions, not regions to accumulate more of your asset. It doesn't matter if it's gold, silver, Bitcoin, or anything else. When you have exponential phases, it's not a good idea to get in. You better wait for the correction, have your cash ready, and then when you hit significant percentages, minus 10%, minus 15, minus 20, minus 25, minus 30 in terms of Bitcoin, minus 40, minus 45%, minus 50, then you start to look at the asset to add a little more to your position. That's how I approach things. So if you put money aside every week and the asset is extending and it's going higher, don't put it in the market. Leave it in your account and wait for a pullback. And then when you detect or believe that it's starting to get in the buying region, in your case, then you start adding in smaller positions, not all at once, and gradually add to your positions. Patient investors wait for the right prices to get in the different assets, and impatient investors may sometimes get in at the worst times. So do not panic, plan ahead of time, and determine where are the regions where you want to accumulate more of your asset. Let's have a look now at silver. Silver is actually quite similar. People that got in early 2025 are still way in profit. The price was what, $30, and we're trading at $73.01. That's what the price of closure of last week. Again, in terms of silver, something similar. Once we move away from the 50-week SMA, we started to see violent corrections. The higher the push, the higher the correction. It's always the case. We saw it a little bit with gold, found a footing here. We saw a big wick of people really buying in at these extended levels. Price pushes back again, corrected hard again, another wick, exactly, slightly lower, but the same thing, people are accumulating. So those who took profits here, added a little bit here and a little bit more here, then they are again in position to take advantage of bargain prices in terms of the silver. From the top, let's see, from the top we have corrected almost 40% with the current price for silver. We have gone with the wick at exactly 50%. So you saw in the second correction here, we really hit 50% almost to the nose in terms of correction, and the first wick was 47%. So if people decided, okay, if the price, now the top is here, okay, let me calculate 45%, and that was here. They put buy orders starting at the price here of 66.40 or 66.45 or something like that. They automatically got the best price in this correction, and here 45% was in the base here. They also got filled in their position if they put that buy order ahead of time. So quite a few investors do that when they see a big peak for an asset. They already right away put buy orders 45%, and some what they will do is they put a portion at 45%, a portion at 46%, another at 47%, increments like that, up to 50%, which sometimes gets filled quite frequently. Sometimes it corrects up to 40% and you don't get a chance to add to your position. But you don't know what's going to happen in the future. So in the case of silver, we have corrected more than gold, which is around 30%. And in this case, if we get to the MA50, we're talking 55% or 56% correction from the top. Is it possible? It could be. The price would be 50, yeah, $53, $54. And the other thing that you need to see is that this was the peak here. The maximum price we hit in October of 2025, corrected, hit it again here in November of 2025, and then we broke out of that price section and then corrected almost near to this price level. So $55 here is very significant in terms of silver. I'm pretty sure there's people right now who have buy orders of silver at $57, 56, and $55. Just in case silver corrects and goes this low. And what usually they do, and they could actually follow that, as soon as the MA50 continues to go up, they can shift a little bit the prices to the upside, because eventually the weekly 50 SMA will act as support. We may get to the price action, but it's possible that we trade sideways here above $65 and then allow time to the weekly 50 SMA to catch up a little bit. And once it's around $65, silver resumes and push upwards in terms of price. So that's my long-term view for silver. Is my long thesis stopped in terms of silver? No. Obviously, there's a lot of volatility. You see it in the chart right now. These types of price movements have never seen in silver. You see here in 2025 up to 2026, the candles were quite tight. There were not huge variation in price in terms of silver. But since this exponential phase, we have seen quite bigger candles, a lot more variation on the day-to-day in terms of silver. That's new. It comes with the territory of bigger numbers in terms of price, but also is due to the explosion in price in a relative short period of time. Eventually, we will get back to a little less volatility and maybe more easier trending of the price. We will have to see if that comes true. But for now, I'm looking at still a bullish sentiment in terms of silver. There's quite a lot of demand for it. It's included in all kinds of electronics, solar panels that we will need in the future, electric cars that we will need in the future, batteries that we need in the future. So I'm not worried about the floor level or floor price for silver. I think the demand will not go away. Same applies to gold, by the way, because the uncertainty around the world, I don't think it's going to diminish. There's going to be quite a lot of uncertainty for the upcoming years, and the place in a portfolio of gold, silver, and Bitcoin, I think will be permanent for a very long time, more and more in portfolios, and that will keep the price active and keep the momentum for these sound money assets. Quickly, we're going to look at oil here right away, and the exponential phase for oil continues. It's trading at $112 as of Thursday, because Friday, yesterday, the market was closed. So 112, this is getting to levels that are becoming more and more uncomfortable for all kinds of countries. And something will have to be done, because inflation is going to spike higher if these prices, or if we stay above $100 for crude oil for too long. And you see here that the SMAs in terms of oil are starting to react the 200 weekly SMA, no, sorry, the 200 daily SMA here still is going down, and the 50 weekly SMA is trending up, reacting to the recent price actions here. So it's going to be interesting to follow oil, because as oil goes up, inflation goes up, and then the more inflation we have, the more impact we'll have in the economy, and governments will have to start printing again to help the economy keep a base level. And that printing will favor our sound money assets, gold, silver, and Bitcoin. So we'll have to see what happens with oil. I think it's a little bit too late to get into oil related assets, because like we just mentioned with silver and gold, when you are vertical in terms of price action, it is quite dangerous to get in assets, because you can be buying the top for that asset. And in terms of oil, if we correct hard, we don't know really when the price will go higher in the future. So it's quite risky to get in at this level. Not financial advice, but it's up to you to decide what to do. Oil is influencing everything: stocks, bonds, gold, silver, and Bitcoin. So that's why I'm covering it right now here, because it has, in April 2026, a big influence of what's coming in the upcoming weeks and months. Keep an eye on it, look at it, and see how your assets are reacting versus crude oil. Finally, let's have a look at our digital gold, which is Bitcoin. And I'm going to cover a little bit the video that I mentioned earlier. First of all, let's look at the price action right now. We are still above this trend line. We are holding this mini uptrend in the bigger bear market period. I will cover what this yellow box is in a few seconds, but this is the box that I define as the bear market box. And I believe that when the box finishes, that's when we will see the close to or near the bottom price for Bitcoin, meaning that I'm expecting that the price of Bitcoin will go lower here. Where exactly, I cannot tell you. It could be 59,000, 57, 55,000 or something like that. But I don't expect it to go much lower than that. Not financial advice, but the main, I don't know, I do not know what bottom price it will have, but I'm going to show you when I expect the price to stop falling according to the previous 8 years in terms of Bitcoin. And in order to do that, let's head to the weekly chart, and we will be able to see the whole thing. Just give me a second. I'm going to adjust this so that you can see everything. Let me give you. Okay. Almost there, almost there. Okay. First of all, don't look at this last box. We're going to start with these two. These two are two complete 4-year cycles for Bitcoin that started in 2016 up to 2020, and then 2020 to 2024. Okay? 4-year cycles. And the 4-year cycles are defined by the halving dates. The halving dates in the protocol are the dates in which rewards for those who are mining and confirming transactions of Bitcoin get rewards, and every 4 years the rewards are cut by 50%. Was cut it by 50% here in 2016, then the rewards were cut again by 50% in 2020, and they were cut again in 2024, April of 2024. That was the last halving, and it will be cut somewhere in March, probably March 2028. It will be cut again by 50%. What many people have noticed, it's not only me, is that these 4-year cycles are quite similar. The last two lasted, the first one here that I'm talking about from 2016 to 2020 lasted 1,400 days, give or take a few days. Okay, and then the next cycle from halving to halving, it lasted 1,407 days. Okay, quite close to the 1,400 that we saw here. That's why I applied 1,407 days again for the next one. We are in April 2026, and this goes up to March, I believe I said, 2028. We'll still have ways to go in terms of this halving cycle. That's the first part. Okay, the 4-year windows for Bitcoin has been respected, and from halving to halving, that's what we see in terms of duration. Okay, now after that, within that window of time, in terms of halvings, okay, we usually have a period of that we call bear market, and that bear market is a period from the top, the maximum price that we saw in that cycle, to the bottom price of that specific cycle. So within that 4-year window, what is the max price? You see it here. It happened in December of 2017. And what is the bottom? This one happened in December of 2018. The cycle, the top was in November of 2021, and the bottom here was in November of 2022. The particularity here is that the bear market here lasted 1 year. The next cycle, completely different years, obviously, but different stages of Bitcoin, stages of the economy, interest rates, inflation levels, job levels, wars, no wars, all kinds of things like that. Okay, the bear market lasted again 1 year, 364 days, give and take a few days. Okay, and now the top of the market that happened in the 6th of October 2025, well, I'm applying exactly the same recipe, meaning that I believe that the bottom will be at the end of this yellow box around the 6th of October of 2026. So far, it seems to be looking like that. And I calculated that on my video that I shared a few minutes ago. And now we are at 182 days. We are 182 days, according to this data, to be able to get to that bottom price for Bitcoin. So many people said during this cycle, oh, the 4-year cycle is dead, is not gonna work. We are we're going to have a super cycle. The price of Bitcoin, because of the ETFs, will never correct, and we're in a new environment. Many people believe that, okay? And I thought so too, that it would change, that it would not be the same thing. But the correction happened exactly as expected. It is quite similar to what we have seen before. Even if you look at the weekly SMAs here, the price action is like crunch because of the numbers, but you see it here that we are pretty much mimicking what happened in the previous cycle. We are in this region here. We are more than halfway through the box. Well, it seems to. But the trend of the 200 SMA and the 50 SMA is very, very similar. So I'm expecting to get the lowest price for Bitcoin in October of 2026. What level of price will it be? I have no idea. Nobody has any idea. Okay. But I believe that the repetition in terms of price action has been respected for the last 8 years. If it is respected up until October of 2026, this time around, it would have been a period of 12 years. 12 out of the 17 or 18 years of existence of Bitcoin, it starts to be quite reproducible. That's the first thing. And also, it tells you that something is influencing this price action that is particular to Bitcoin. Why? Because during a period of 12 years, it is impossible to have exactly the same economic events happening over and over and over every 4 years. It's impossible to control. There's way too much variables. But if Bitcoin repeats itself and is predictable in these periods of times, you can really extract the most amount of value from Bitcoin. Initially, we did not have ETFs. Now we have ETFs. On top of that, we have Bitcoin related companies like Strategy. We have way more variety of stocks to select exposure towards crypto. For example, now we have Coinbase, we have Robinhood, we have Strategy, and we have other companies too. that we can invest in. Now we have Circle also, who's public with related, who is related to stable coins. We did not have that in the past. But the most important thing, I think, for investors, and now I'm going to be following this strategy. I would not say blindly, but automatically until this breaks. And I'm explaining what I'm going to do. So, right now, even though it's not necessarily recommended, okay, um, I am shorting Bitcoin because I believe the price action will correct to be able to give me the best bottom price of Bitcoin in October of 2026. So from now on, if it trades sideways or if it corrects, if I short Bitcoin, I will be okay. And I will explain what assets I use to do that. I use ETFs that give me yield weekly, both to the upside and to the downside. Okay, so I'm using ETFs during this period, and right now I'm going to be heavier on the short ETFs that pay weekly dividends until October of 2026. In October 2026, I will shift my proportion to be heavily long Bitcoin ETFs that also pay weekly. And I will explain that if people want to know about it over time. Around that time, I will tell you guys what assets that I'm using in order to capture value, but also capture price action, the upside or the downside of Bitcoin during these periods. And I plan to do that quite automatically following these dates. Why? Because it has worked quite well in the past, and I'm expecting it will work well in the future. If you had those tools in previous cycles, you could have done the following. Shorter market here at the top in November of 2017, held these ETFs during the whole year and switch, okay, in December of 2018 to long ETFs that are going to appreciate with the Bitcoin price appreciation, but also give you weekly distributions so you can decide what to do with the distributions, either add more to your long position or invest in something else. But if you see here, if you switch to long ETFs, then you had, yes, a long period here where it was trading sideways, but then the big push in price, a good correction, another big push in price, and then exactly at this time, you can switch again and short Bitcoin for a year. You hold your position and you sell at the bottom. It was a perfect trade in this case. Then you switch again to long-term Bitcoin ETFs, and then you went up and up and up, big corrections, but up. The trend is up, is up. And here, switch again, you short the market, and so far it has worked again. So if you had those tools were not available in 2017 and 2019, I don't even think they were available in this cycle. They are only available since 2025. And some, near the end of 2025. They were not even available at the beginning of 2025. So now we have a bunch of tools, ETFs that we can use to extract value from the Bitcoin cycle. And like I indicated, my strategy will be to extract the maximum amount of value following this repetitiveness in terms of the price action for Bitcoin. It is predictable. You just have to follow and stick to your strategy regardless of what's going on outside, because outside the news, people talking to you about Bitcoin, it's going to be doing this, it's going to be doing that, it's going to influence your decisions. But if you stick to your plan, it could be very good in terms of strategy. Again, until it breaks. Will this 4-year cycle having and 1-year bear market period within those 4-year cycles last for 3 cycles of Bitcoin and after that it breaks? Or it lasts for 20 cycles of Bitcoin and then it breaks? I don't know. But until it does not respect this type of patterns, I will stick to them. I have been burned in the past. I did not follow it the last time. Here at the top, I should have switched it to shorting Bitcoin. I knew it, I didn't do it, and now I'm actually pretty mad that I didn't do it, because I believed everybody who was saying, oh no, we're going higher, don't worry, we're going higher. And it did not happen. So now I know, I have my conviction in Bitcoin, I have my thesis in terms of trading, I have my plan in place. Now it's a matter of execution. You need to execute and do it properly. So that's the plan for now. That's what I'm going to do. It's not financial advice. It's up to you to analyze these 4-year cycles in terms of Bitcoin. Look at my video also. You will get the dates of the halving cycles, the dates of the top, the dates of the bottom. You can do your own research. Look at the charts, verify the dates, verify the price, and see for yourself how repetitive and predictable this data is. I believe the 4 cycles will continue for many cycles, and I plan to extract value out of them, each and every single one, until it's no longer the case. But if it lasts 10 cycles and I catched, in this case would be 7 out of the 10, I will be extremely happy with my trading in terms of Bitcoin. And again, everybody has his own strategy, everybody has his own plan. You need to decide also how much money you're going to deploy towards Bitcoin, how much money you're going to deploy towards silver, gold, and stocks and other investments, real estate, and all the different assets that you want to use to diversify your portfolio. You need to look into that. I cannot guide you because I don't know your situation. Everybody needs to see where they are comfortable, where it becomes too uncomfortable, so that you properly evaluate what are your preference in terms of strategy, in terms of size of assets. And after that, always have a plan If you have real estate portion of your portfolio, have a plan for that. If you have stocks, set the amount, select the ones that you want to do, select an index if you want to use an index. It's up to you. Then gold, how much? Silver, how much? Other commodities you want to include. Bitcoin, how much? And then you stick to your plan. That's how you plan it. That's how you invest. Stay in the market. Add to your portfolio as much as you can once you cover your basic needs: food, rent, mortgage, expenses on travel. You know, you need to get to work and things like that, insurance and all the different things that you need to cover. Once you have that, take a portion of your money, keep some in cash, and the rest you can invest. And from there on, you build every 2 weeks, every month, your portfolio, and over time, you will benefit if you have a plan. Build it slowly, have a plan, and after that, you just need to execute your plan. So happy investing, everybody. Unfortunately, we do not have questions, comments during this live chat. We're slightly above 1 hour. I'm gonna cut it here, but I hope you learned something today. It's quite important to keep learning, keep looking at different assets, find the comfort zone that you want in terms of your portions of investments. But the key thing is keep investing. It's not because it's horrible out there, the situations are what that are happening in the economy and things like that. Many people are extremely fearful right now, and prices of assets are very, very good right now. But nobody wants to invest. Everybody thinks that it's going to be lower, be lower, be lower. And what eventually happens is that because of here you don't invest, then the price recovers quickly. And once you want to get in the market, well, the prices have gone 10-20% already, and you're coming in late. So when everybody is fearful, usually it's the best time to add to your assets. And when it's euphoric, you see it here in Bitcoin, when the price is at the maximum and people believe that nothing will stop Bitcoin, well, it's a good time to switch and take profits, because you may have to wait a couple of years until it comes back. You see it here in Bitcoin. The top was in December of 2017, and then it took us up until December 2020 to come back to the same level. Here it was November 2021, and then we came back, was April 2024 to get back to the same level. Okay, so now our peak was in December of 2025, actually in October, sorry, of 2025. How long it's going to take to get to the same price section of 125,000? We are at 67,000. Okay, how long will it take? So have your plan in place and execute it, and have fun investing. It is a fun thing. It's not easy to do. Even I have doubts, and I just told you that here I knew that I should have switched to shorting Bitcoin, and I did not do it. I was influenced by all the people who were talking about Bitcoin, and I did not act. And that will not happen anymore. I have my plan. I stick to it. So I have 182 days. 182 days. In 182 days, I'm switching and I'm going to be long Bitcoin, and we will see if it holds. So thank you very much. See you tomorrow, 11 p.m. for the Sunday live stream. Thank you again for those who went up to the end of the video and learned something today. Subscribe to the channel, put comments on the videos, and I will gladly answer all the questions that I get. Thank you very much. See you all next time.